What is up, you guys? Welcome to Bitcoin Reactions. My name is Dan, and today I'm going to be reacting to a really good video from 2011 from popular political commentator and Bitcoin skeptic Sam Seder, titled How Bitcoin Shows We Don't Want a New Gold Standard. And I actually scoured the internet, and as far as I can tell, this is not only the first video of Sam Seder discussing Bitcoin, but this is actually one of the first videos I can find on all of YouTube regarding Bitcoin in general. For reference, Bitcoin was only about $4 at the time this video was released.
Wow, that is all.
And you're going to want to pay close attention because, spoiler alert, Sam actually makes a pretty incredible case for Bitcoin here. This one's going to be really good, and I just want to dive in, so let's start.
You know what Bitcoin is? You know what Bitcoin is. What is it? Tell me what you think it is.
It's kind of like a BitTorrent, but to send money.
So you can buy Bitcoins, right?
Yes.
He says that Bitcoin, rather than fixing the value of the virtual currency in terms of green pieces of paper, in other words, instead of saying, I'm going to peg Bitcoin to the dollar, what we're going to do is we're going to limit the amount of Bitcoins. There's a finite amount of Bitcoins, I guess, in circulation.
Yes.
So as more people come into the Bitcoin world, the value of it will raise.
Yes.
Okay, so Sam is starting off really strong here. And I think that's Matt Binder in the background giving his explanation of Bitcoin, which is that it's like BitTorrent, but for money. And I actually really like that analogy a lot. Next, Sam continues on explaining that with Bitcoin, there's a finite supply, which means that there's no formal relationship between the dollar and Bitcoin. And next, Sam says that as more people come into the Bitcoin world, the value of Bitcoin will be forced to rise.
So as more people come into the Bitcoin world, the value of it will raise.
Yes.
Listen, I know that recently Sam and Matt have both earned the reputation of being really harsh skeptics of Bitcoin, and that actually makes it really surprising how well they explained it here. And not only that, but Sam really gave a clear and concise explanation of why the Bitcoin price is going to continue to rise. So just based on the first 30 seconds, everything these guys are saying is spot on. It's almost like they're doing a pitch on why you should invest in Bitcoin. Let's continue.
It fixes the total quantity of cyber currency instead, and it lets its dollar value float. In effect, Bitcoin has created its own private gold standard world, right? Finite amount of Bitcoins or gold that fluctuates in its value to the dollar, in which the money supply is fixed rather than subject to increase via the printing press. You can't print more gold, right? And in this instance, you can't theoretically print more Bitcoin.
Wow, Sam is continuing on perfectly explaining Bitcoin. He essentially says that Bitcoin is its own independent financial ecosystem, and he tops it off by reiterating that you cannot print more Bitcoin in the same way that you can print more dollars. So far, I have to say, it seems like Sam gets it. Bitcoin is its own independent economy. It's completely open to everyone, and your Bitcoin can't be devalued through inflation. Obviously, there's a lot more to Bitcoin, but if I was going to sum it up into just a few quick sentences, I really couldn't do much better than what Sam's doing.
You did good.
This is awesome. Let's see what Sam has to say next.
Buying into Bitcoin has, at least been so far, a very good investment because, even though it's fluctuated, overall, the value of each Bitcoin has soared. Whatever you bought it for, Bitcoins a year ago, if they existed, they'd be worth much more in dollar terms.
Wow. Again, Sam is spot on. He basically explained in 10 seconds why Bitcoin has continued to increase in value. He acknowledges that Bitcoin has proven to be a very good investment and says that although the price has fluctuated, overall, the value of Bitcoin has soared. And I know this video was from 2011 when the price of Bitcoin was only $4, but everything he's saying is still 100% true today. The price of Bitcoin is always fluctuating. There's a lot of volatility, but if you zoom out, the price is soaring.
It's been getting bigger every day.
It's funny. He thought that the price was soaring and really high when it hit $4. Now we're thinking that the price is soaring and really high when it's $100,000. Big difference in price, but the narrative is still the exact same. Let's move on.
And so he says, but does that make the experiment a success? No. Because what we want from a monetary system, which is what Bitcoins are, isn't to make people holding money rich. We want it to facilitate transactions and make the economy as a whole rich. And that's not at all what's happening in Bitcoin. In other words, We want the economy itself to expand and everybody to enjoy, not just to have a lot of dollars or to have valuable dollars. We want them to have the capacity to use them to buy products and whatnot.
Okay, so first, I just want to give credit where credit is due. And I want to say that I love how he reiterates that Bitcoin is its own financial system. So many people just try to describe Bitcoin as money, which it is, but that really shortchanges it on so many levels. In my book, I actually describe Bitcoin very similarly to how Sam is describing it. I explain that Bitcoin is both a complete and independent financial system, and also that it is the currency inside of it. And that's a really important distinction. And then he continues on explaining the goal of the financial system, which is to have a currency that gives people the capacity to buy things with it, not to make one that makes rich people richer. And here's where I really need to get into some nuance, because here's the thing. Sam is absolutely right here. And this is where I don't think the power of Bitcoin is really clicking with him yet, because based on Sam's goals, Bitcoin is the best option. But in order to explain why, I need to dive deep into the idea of people getting richer just for having a lot of money.
Let's dive into the nitty-gritty.
Listen, a system that rewards rich people just for being rich is unfair. Sam, myself, and I think most people in the world would probably agree with that statement. And here's where things are about to get really nuanced, because in practice, that's exactly the way that traditional financial systems work today. In the United States, for example, our system operates in a way that steals from the poor and gives to the rich. Basically, it's a reverse Robin Hood. I'm sure a lot of people intuitively feel that or believe that, but here's exactly how it works. The government, in combination with banks, is always creating new money. And when this new money is created and injected into the economy, it's not distributed evenly among society. Instead, this new money is injected into small pockets of the economy. And the people that get this new money first are able to get the most value from it. This is also known as a quintillion effect. Basically, it means that those closest to the money printer get the most value from it. And yes, this new money always ends up eventually creating inflation, stealing away the purchasing power from everyone that's far away from the money printer. But that's only the beginning. Because when most of this new money is being created, the majority of it isn't being spent on consumer products. Things that inflation indexes like the CPI would usually measure. Instead, it's being funneled into assets like the stock market and real estate. And this creates something called asset inflation. It's basically the reason why the CPI inflation tends to stay low, while things like buying a house have become increasingly unaffordable. And this all occurs because once you have a certain amount of wealth, it's really hard to spend it. So instead, you have to find ways to store it that won't lose value due to inflation. So to reiterate, new money is created, then that money is funneled into assets, making them more and more unaffordable to the working class. And the net result is that the people who already own the assets get all this new wealth handed to them, directly at the expense of the people that don't. And when you look at the numbers, the richest 1% of the population owns more than 53% of the entire stock market, while the poorest 40% of the population owns less than 2%. So again, the net effect of all of this is that our system is designed to steal from the poor to give to the rich. And it does that by eroding away the purchasing power of our currency, the dollar.
Yes, the system is corrupt.
Remember, Sam was saying that the point of a currency was to have the capacity to buy things with it. But in our system, the capacity for the dollar to buy things is getting reduced every single day. Bitcoin, on the other hand, takes a fundamentally opposite approach. You can't print new Bitcoins. So this type of consumer and asset inflation just doesn't happen. Bitcoin gets to stay very valuable. And yes, in the transitionary period where the world is moving to a Bitcoin standard, the Bitcoin holders, as Sam puts it, are going to do very well for themselves. But by the time Bitcoin is normalized as a currency, the price of Bitcoin will have already plateaued, and the reward for owning Bitcoin will be negligible. At that point, Bitcoin won't really be an investment, it will be a savings tool. Something that you can feel very confident won't erode away in value like the dollar or any other fiat currency. So basically what I'm saying is that Bitcoin is exactly what Sam is looking for.
It's everything we've been looking for.
A currency that maintains the ability to buy products while also being fair in that it doesn't financially reward the rich just for being rich in the way that our current system does. Let's move on.
What that means is if you measure prices in Bitcoins, they have plunged. You follow that? If prices have remained steady for a Slurpee, okay, and in American dollars, a Slurpee is $1. Well, that may have cost you one Bitcoin a year ago. Now it would cost you half a Bitcoin. That means in the Bitcoin economy, you have deflation. The value of commodities has dropped, and your Bitcoins become more valuable because they can buy you more things.
Again, Sam is really knocking it out of the park here. He's explaining perfectly that if you measure prices in Bitcoin, then the price of everything has dropped. And that statement is still completely true today. The only difference is instead of measuring the value of Bitcoin in smoothies, now we have to measure it in things like houses. Right now, the average price of a house in the United States is only about 4 Bitcoin. And if we wait another 10 years, then the price of a house is probably going to be more like 1 Bitcoin, maybe a lot less. So for everyone that's upset about the price of housing going up, it's only going up if you measure in dollars. And because of Bitcoin, now you have the ability to do something about it. You can choose to move some of your wealth to the Bitcoin network, and all of a sudden, you'll see the price of homes begin to plummet in terms of Bitcoin. I would say, listen to Sam here, that Bitcoin is only going to become more valuable.
So the Bitcoin economy, as opposed to the currency, has experienced massive deflation. And because of that, there's been an incentive to hoard Bitcoins rather than spending them. Because if you realize today that a year ago, 1 Bitcoin could have bought you a slushie, and today, only half a Bitcoin it will cost to buy a slushie, you're thinking, if I wait another year, I can get 2 slushies or 3 slushies with a Bitcoin instead of 2 today. So you're going to hold on to that money, that Bitcoin.
All right, so what Sam is so eloquently explaining here is something called Gresham's Law. And basically, Gresham's Law just states that bad money drives out good money in economies. So if you have both dollars and Bitcoin, and you know that your dollars are going to become less valuable, then given an opportunity when you have the ability to spend both, you're going to choose to spend the dollars every time because you just want to get rid of them.
Spend the dollar.
And this is really the core reason why Bitcoin adoption as a currency has been so slow. Because everyone holding Bitcoin knows that the value of them is going to keep on going up while the purchasing power of the dollar is going to keep on going down. So really, Sam is totally spot on here. And his analysis is really just showing why Bitcoin today is being treated more as an investment asset than anything else. Let's continue.
And if you relied on Bitcoins to do your job, let's say I'm only gonna provide my web design services for Bitcoins. Nobody's spending their Bitcoins, and you don't take dollars. You just take Bitcoins. People aren't going to spend their Bitcoins because I'm going to wait. Then you start to suffer in your job. You lose your job.
Okay, so I need to correct Sam on something here. In his explanation, he's saying that if a web designer only accepted Bitcoin to do their job, then they would lose their job because nobody wants to pay in Bitcoin. And here's why I think this theoretical explanation just doesn't make a lot of sense.
It's just not realistic.
First, it's unlikely that a web designer would only accept Bitcoin. But for the sake of argument, let's just say he did. In that situation, the more likely result would be that the designer would just offer his services at a discounted Bitcoin rate. And you actually see a lot of examples of this in real life. I was actually listening to another Bitcoin educator explaining a similar situation he had hiring contractors in India. Basically, he and the contractor formed an agreement for the cost of the services he was purchasing measured in rupees. But the contractor said that if he was willing to pay in Bitcoin, then he would offer a discount. And this discount was essentially just the contractor saying that Bitcoins were that much more valuable than rupees. Another way to say it is that if you're going to pay in bad money, then you're going to have to pay a premium. So back to Sam's situation, if a web designer specifically only wanted to be paid in Bitcoin, it's unlikely that anyone would say no because in most locations, it's not hard to get Bitcoin in exchange for fiat currencies. So in reality, the web designer and his client would probably just have to renegotiate a price that reflected the value premium of Bitcoin.
It's not that complicated.
No one would suffer. No one would lose their job. Let's continue.
So to the extent that this experiment tells us anything about monetary regimes, it reinforces the case against anything like a new gold standard, because it shows just how vulnerable such a standard would be to money hoarding, deflation, and then depression.
Yeah. So I'm just getting a completely different conclusion than what Sam is getting here. The conclusion that he's getting is that the results of Bitcoin reinforces a case against anything like a new gold standard. And the conclusion that I got, both from the results and Sam's description of the results, that given an option between living in a system where money gets more valuable or money gets less valuable, that most people are going to take the system where money gets more valuable every time.
Obviously.
And I'm actually surprised that Sam isn't seeing this too, because for the most part, he really explained everything so well. He explained the core fundamentals of why Bitcoin is designed to raise in value compared to the dollar. And he literally read out loud the results, which were that people were holding on to their Bitcoin and that the price of Bitcoin was exploding. So what I'm confused about is how can somebody read all that, hear all of the results, and come away with a conclusion that Bitcoin is both failing and can lead to a depression? That's like watching Tom Brady win his 7th Super Bowl and coming away with a conclusion that he's really not NFL talent. It just makes no sense.
It doesn't make sense.
It's like reality was sitting right there in front of Sam, and all he had to do was open his eyes and he could see the future and tell all of his fans to buy Bitcoin and that they should start looking at it seriously, and he just couldn't do it. I don't know. Hopefully he sees it now. I know he doesn't, but hopefully he does. Maybe he'll look back on this video and be like, maybe Bitcoin is something I should really be taking seriously.
I wouldn't count on it.
Overall though, I really like this video a lot. It's really surprising because I know that Sam and Matt have really turned into harsh Bitcoin critics. So it just feels really ironic that they gave such good explanations of Bitcoin, explaining what it was, how it worked, and why the price is going to continue to go up. And again, this was in 2011 when the price was only $4. I really wish I could just dive into their heads and pick their brains to see what they were thinking a little bit better. For a grade on this video, I'm a little bit torn, obviously. I really have to give Sam an A for his explanation of Bitcoin and really for most of what he said because it was really good. But again, I feel like I'm grading a math test where Sam showed all his work and all of his work is 100% correct and then he still came away with the wrong answer. I think teachers usually give some sort of partial credit on situations like that, but I don't know. Tell me in the comments what you guys would grade Sam's explanation of Bitcoin here. Do you agree that Sam gave an amazing explanation of Bitcoin, or do you think that there was something I missed and that's why he couldn't quite get it? And if you like this video, be sure to give it a like and subscribe. It really helps my channel out so much. And please, if you're getting a lot of value from my videos, go ahead and send it to a friend that you think would get value from it too. That's one of the best ways that I can help my channel grow. That's it for today. I'll see you guys for the next one. I'm out.